Hi, my name is Dora. I'm a chartered accountant at Grace Certified Accountants. Welcome to today's video. How much you should save for your taxes. Are you self-employed? Knowing how much you should be saving for your taxes is very important. Even though tax isn't due until 31st of January 2026, planning now and setting money aside will save a lot of stress later. Let's look at why it is important to plan and save for tax now. You see, many self-employed individuals forget to set money aside throughout the year for their taxes. If you plan now, this could save a lot of financial strain and panic at the last minute. Also, planning ahead will save a lot of stress, will avoid last-minute panic, and it will just ensure a smooth sailing and ensure that all your deductions are claimed. Also, planning ahead will ensure less stress, encourage budgeting, and also possible tax savings. Who wouldn't want to save on tax? Now, let's look at how much you should be saving for your taxes. As a general rule, 20 to 30% is advisable. Well, your tax rate or the tax that you're going to pay is dependent on, one, your total income. Of course, higher earners or higher income earners will pay higher tax. It's also dependent on all your deductible expenses. So has everything been included on your tax return? And thirdly, it's also dependent on, allowable deductions and allowances if you qualify for them. So if you don't qualify, then obviously that will determine what tax you pay. So saving for tax, is a simple thing to do, but then also simple not to do. So planning ahead will save a lot of stress and also possible tax savings, which, will be beneficial to your business. The key advice I would like to give now is keep good records, is advisable, because then it ensures that all your expenses are recorded and they're all in one place, and therefore there isn't any last minute panic of looking for records here and there or looking for receipts here and there and everywhere, to ensure that all the deductions are claimed. And then secondly, use accounting software such as QuickBooks or Free Agent, or even a spreadsheet. Just make sure that, if you're using a spreadsheet, record everything on there. Using an accounting software such as QuickBooks or Free Agent, we ensure that all your deductions are in one place. And secondly, it can give you tax estimates. Therefore, beforehand or before the tax year ends, how much tax you possibly have to pay. And that is a good thing to know. And then being aware of the tax deadline or the payment date is also important, because when you know when you have to pay for tax, then you know how much time you have left to plan and budget for those finances. So one, knowing your estimated tax is important. How are you going to know this? You know how much tax is due or your estimated tax due by having good records. And how are you going to have good records? It depends on the system that you're using. If you use Excel, just ensure that everything is reported or is recorded on your Excel. However, it's advisable, especially with everything making tax digital from April next year, it's advisable to start using online accounting software such as Free Agent or QuickBooks, so that all your expenses are automatically in the software, and it can also give you tax estimates. And knowing this information beforehand or before the tax year ends or before it's due, then it will help you to understand what you need to find. If you do not already have the funds, then it will help you to get that money together so that you can pay for your taxes. For this current tax year, 2024-25, the payment deadline is, first of all, the submission deadline, that is the deadline to submit your self-assessment tax return, is 31st of January. However, you can submit your self-assessment tax return from as soon as the new tax year begins. So from the 6th of April onwards, so 6th of April next month onwards, up to the 31st of January, anytime between these 2 months, you can submit your self-assessment tax return. That is one less thing to worry about. And secondly, the payment is also the same deadline as the submission date, which is 31st of January. So the deadline for submitting your self-assessment tax return and paying whatever tax is due is the 31st of January 2026 for this current tax year. So why not you take advantage of all the resources available, or if you have to get software, why not do that? Because, oh, by the way, if you pay for software such as QuickBooks or Free Agent, those are deductible expenses, because that is, software that you need to carry out your business activities. Or why not take advantage, because it will be an allowable expense, at the end of the day, and help minimize your tax liability. So getting accounting software, recording all your expenses, knowing how much tax estimate you're due to pay by the time the deadline comes are advisable things to know, so that you prepare yourself on time. So in summary, what I would like to share with you is, A, if you're self-employed, set some money aside towards your taxes throughout the year. How much should you set aside? Ideally 20 to 30% of your total income. So when the income comes in, just open a separate bank account, and then automatically just send that 20 to 30% income to that separate bank account. Treat it like a bill. When the bill just goes by direct debit or standing order, just let it go automatically every month. And then secondly, have good record keeping habits. So keep good records, use accounting software, or utilize a spreadsheet, which in the next coming months, by next year, every sole trader who earns 50,000 or more will have to use MTD, or Making Tax Digital accounting software, or Making Tax Digital compatible software. Finally, if you need help figuring out how much to set aside for your taxes, let's have a chat. Get in touch with me directly at all the contact details are on our website, www.gracecertifiedaccountants.co.uk. If you found this video helpful, please like it, share and subscribe for more informative tax tips and advice. I look forward to seeing you again soon. Thank you.